Be Wealthy and Smart, episode 795.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk a little bit about the election ahead, but more about big tech stocks and the headwinds that I'm seeing for them. And I've picked an article from Reuters to share with you about those big tech stock headwinds. But before I do, I just want to say I'm excited that the next time you hear from me, the election will be over and hopefully we'll have a clear winner. A lot of people are talking about contested results or a contested election. I really hope that doesn't happen. But there's a lot of chatter on business channels about that. So we'll see if there's any truth to that. In the meantime, there's a lot going on with debt and the dollar, and it's impacting markets. And we're starting to see a lot of volatility come into the market. The NASDAQ is still up 21.6% year to date. The S&P is barely hanging on there with a positive return of 1.2%. And the Dow is still down 7.1%. Those value stocks just haven't taken hold yet, but they still might. And it looks like a lot of money is trending toward value stocks, and we'll talk more about that in a minute. The S&P 500 is down 8.9% from its all-time highs. NASDAQ is down 9.6% from its highs, and the Dow is down 10.3% from its all-time highs. I hope that we do have an uncontested winner, but interestingly, Bank of America said stocks could slide as much as 20% as soon as Wednesday if there's a contested election with no clear winner. So that article was put out ahead of the election, and we'll have to see if they're right. It happens to coincide with a lot of volatility I'm picking up as well, which is why that article caught my attention and why I even mention it to you. Yes, I'm seeing tons of volatility in this month of November, and it is going to be crazy. I see some on the upside and a lot on the downside. And again, it has to do with debt and the dollar, and it's continuing. You see, the Federal Reserve is going to meet this week. And should they do any more quantitative easing, or should there be another stimulus package? Well, that's likely to be creating more debt, which is likely to result in a weaker dollar. If the dollar goes down, it could be so negative that the markets interpret it as more stimulus is only going to weaken the dollar going forward. A weaker dollar could mean that people jump out of the dollar and into more stable stores of value, such as gold, silver, and cryptocurrencies. So we'll see what happens. But the big action this month, I think, is around debt and the dollar. So let me share this article with you from Reuters because I also see that tech stocks got dramatically overvalued. And what I've noticed is that this correction in the tech stocks isn't quite the normal pullback. This isn't one of those buy the dip opportunities. It looks to me more like professional managers are saying technology got overvalued and now they're rotating out of technology and into value stocks. That could mean that there's limited upside for technology and the FANGs may have more difficulty ahead, which is what I suspect. But here's this article from Reuters. It was written by Dave Randall and Sevilla Herbst Bayless, and it says, Wall Street week ahead. Big tech stocks may face post-election headwinds no matter who wins. And it says, some investors are betting the technology and communication stocks that drove a massive rebound in U.S. markets this year will face a tougher slog in coming months, no matter whether Republican President Donald Trump or Democratic challenger Joe Biden wins Tuesday's election. Betting against big technology has been a risky proposition over the last decade, as stocks like Amazon, Google, and Netflix have shot higher at the expense of so-called value and cyclical stocks such as banks and energy companies. Recently, however, some fund managers say they are growing alarmed by what they see as a consensus in Washington to tighten regulations and prospects that another large stimulus bill would bolster a rotation out of tech and into other sectors, including economically sensitive value stocks. There will be a shift, and it is starting, but it will take time, said Max Golkman, head of asset allocation at Pacific Life Fund Advisors, which cut its exposure to large cap tech in September to neutral from overweight. Should Biden win, as polls suggest, technology companies could face higher tax rates and tax-motivated selling, as well as increased regulation, investors said. Both Trump and Biden have criticized large tech companies, but stopped short of explicitly calling for them to be broken up. Trump has said there is something going on in terms of monopoly when asked about big tech firms. Apple, Microsoft, Amazon, Facebook, and Google parent Alphabet now make up approximately 23% of the total weight of the S&P 500, according to S&P Dow Jones indices, giving their gyrations an outsized impact on broader markets. Hedge fund manager David Einhorn of Greenlight Capital, a longtime tech bear, told clients in a letter this week that tech stocks were in the middle of a, quote, enormous bubble that popped when the S&P 500 hit its record high on September 2, 2020. Technology stocks tumbled in the past week's sell-off, though earnings results from companies like Facebook, Alphabet, and Amazon have shown how the tech giants expanded their business this year. It has become more difficult for mega-cap tech to surprise on the upside, analysts at UBS Global Wealth Management said in a note Friday. Some investors pointed to recent hearings in Washington as a sign that increased regulations will come to the sector no matter which party takes control in Washington. The Justice Department's lawsuit against Google in late October marked the first time the U.S. government has cracked down on a major tech company since it sued Microsoft for anti-competitive practices in 1998. This may be the only bipartisan issue out there, Pacific Life's Golkman said. An anticipated $2 trillion stimulus package by Biden, who leads Trump in the national polls by 10 percentage points, could enhance the appeal of out-of-favor stocks like construction equipment and materials companies, investors said. A shift to value stocks is increasingly likely over the next 12 months, said Eduardo Costa, who runs hedge fund Calixto Global Investors LP. Calixto, which invests largely in technology, media, and telecom stocks, has returned 30% since January, an investor said. Potentially higher taxes under a Biden administration are another worry. Biden has proposed increasing the corporate tax rate to 28% from 21%, potentially weighing on companies' earnings. A separate proposal to tax capital gains and dividends as ordinary income could prompt some investors to sell winners in order to lock in lower tax rates, analysts said. Brian Jacobson, senior investment strategist at Wells Fargo Asset Management, said his firm has been underweighting the NASDAQ composite and is moving more of its portfolios into cyclical stocks with more compelling valuations, especially industrials. We've done some scenario analysis and thinking through various permutations of who controls Congress and the White House, and our general view is that it might not matter all that much, he said. And that's the end of that article. So there's a lot in there, and I'm going to stay away from the political side of this. But what I do want to say is that the trades this year have all been toward online tech. And it's easy for some investors to think, oh, the market's backed off. It's buy the dip and buy those tech companies again. And what I'm showing you this article for is because what I'm seeing, and why I chose this article for you is because what they're seeing is there's a rotation out of those top tech stocks. And I do think there is going to be more Department of Justice action against some big tech companies. They have monopoly situations and some other things going on. And I think that the Department of Justice may take action right after the election to do something about it. So these managers have been rotating out of some of the big tech companies and into more value-oriented companies that are undervalued and don't have as high of PE ratios and aren't as lofty of prices. So just be aware if you're in some aggressive portfolios like the ARK ETFs that have Tesla as their number one holding in several of their ETFs, just be very careful because you could see Tesla take quite a tumble. You could see Amazon take a tumble. You could see Apple and Facebook take a tumble. All of their charts look very weak to me, and it wouldn't surprise me to see them come down to a lower level of support, which is quite a bit lower from where they are right now. So just be really cautious in your tech stocks if you do own individual stocks. Be careful in some of those tech-laden ETFs. I think everything looks vulnerable right now in terms of big cap tech. And the money is rotating out. That's why technology sold off more than anything else, being down 9.6% from its all-time highs. So be very cautious here. I do see a lot more volatility in November. It wouldn't surprise me one bit to see a 20% decline in a couple of days. There's just so much going on. There's so many companies reporting. There's so much economic news and things happening with the dollar and with debt that this is a formula for something very volatile to unfold here. So just be very cautious. Again, we at the VIP Experience have been in cash since October 14th, which was the double top, and we have been sitting this one out, except for our precious metals, which we think are going to benefit from additional stimulus whenever that gets passed and more debt is created will help those precious metals portfolios. So whatever unfolds in the next 48 hours as we get through Election Day Tuesday night, I hope everything goes smoothly and safely, and mostly I hope that we have a clear winner and an uncontested victory. If you haven't yet subscribed to Be Wealthy and Smart, hit that subscribe button and you'll be notified as soon as new podcasts are available so you never miss one of them. And don't forget, my whole wealth mentoring library is over at lindapjones.com/podcasts. All of my podcasts are there, and so is a search box where you can search for whatever topics you want to know more about. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.